Are you ready to discover a way to make money every single month without lifting a finger? If you've been dreaming of building a stream of passive income, this video is going to change your perspective completely.
Hi there. Before we dive in, please take a moment to read the full disclaimer on the screen.
We're diving into 6 high-yield dividend ETFs that pay monthly. Basically, your ticket to a passive income heaven. But here's the thing. Not all ETFs are created equal. Some are solid, reliable income machines, while others might seem tempting but end up being risky or inconsistent. By the end of this video, you'll know exactly which ones are worth your attention and how they can fit into your financial strategy. Before we jump in, ask yourself this. How would your life change if you had an extra few $100s coming in every month just for holding a few ETFs? Could it cover groceries, your Netflix subscription, or even help you save for a dream vacation? Drop your answer in the comments below. I'm genuinely curious about what passive income would mean for you. Okay, let's start with the basics. ETFs, or exchange-traded funds, are like baskets of stocks. They bundle together multiple companies into one investment, so you don't have to pick individual stocks. Some ETFs focus on growth, others on bonds, and some specialize in dividend-paying companies. For our purpose today, we're focusing on dividend ETFs that pay monthly. Why monthly? Because monthly payments make it feel like you're running a small business that pays you consistently, without the work. It's a simple way to take a step closer to financial freedom. Now, here's the first ETF on our list. Global X Super Dividend ETF, SDIV. This one is famous among income investors for a reason. It invests in 100 of the highest dividend-paying companies worldwide. The yield is quite attractive, often in the double digits, and it pays dividends every month. Sounds amazing, right? But here's the catch. High yield comes with high risk. Some of these companies are smaller or more volatile. So, if you're new to investing, it might be better to combine this ETF with a few safer options to balance things out. But for those who want a higher monthly cash flow and don't mind a little risk, SDIV can be a game changer. Moving on to number 2, Invesco KBW High Dividend Yield Financial ETF, KBWD. This ETF focuses on the financial sector, including banks, insurance companies, and real estate investment trusts. One of the unique things about this ETF is that it gives you exposure to a specific industry while still paying monthly dividends. Historically, financial companies can weather certain market cycles better than others, and KBWD has a solid track record of paying monthly. But here's a question for you. Do you feel more comfortable investing in a single sector or a mix of sectors? Think about it and drop your thoughts in the comment section. I'd love to see your perspective on sector-focused ETFs versus diversified ETFs. Number 3 is iShares Preferred and Income Securities ETF, PFF. Preferred stocks are a unique type of stock that acts a bit like a bond. They often pay higher dividends than regular stocks and take priority over common stocks when it comes to payouts. PFF is packed with these preferred shares, and it pays monthly dividends consistently. If you're looking for something a bit safer than high yield but still want that monthly income, PFF is worth a close look. And here's something to consider. Do you want more stability with slightly lower payouts or higher risk with bigger monthly checks? Leave your answer in the comments. I'm curious which approach you'd take. Next up, number 4, Wisdom Tree U.S. High Dividend Fund, DHS. This ETF is designed to track the performance of high dividend-paying U.S. companies. One of the reasons investors love DHS is its focus on companies with strong fundamentals and a history of consistent dividends. It doesn't pay the absolute highest yield in the world, but it balances risk and reward nicely, which makes it perfect for someone who wants a reliable monthly income without too much stress. Think of it as the steady workhorse of monthly dividend ETFs. Our 5th pick is SPDR Portfolio S&P 500 High Dividend ETF, SPYD. This ETF is different because it focuses on high dividend-paying companies within the S&P 500, which is the index that tracks the 500 largest companies in the U.S. What makes SPYD interesting is that it combines the stability of large, well-known companies with attractive monthly dividends. It's a good blend for investors who want safety plus income. And here's a question for you. If you could pick only one type of company to invest in, large, stable companies or smaller, high-risk ones, which would you choose? Drop your thoughts below. I'm eager to see your reasoning. Finally, number 6. Global X Super Dividend US ETF, DIV. Like SDIV, it focuses on companies with the highest dividends, but it narrows its scope to the U.S. market. This can be a safer option for those who prefer not to venture into international markets. The monthly payouts are attractive, and it provides a way to generate a solid income stream while staying closer to home, so to speak. For many investors, a combination of domestic and international ETFs can create a balanced, diversified portfolio that maximizes income while spreading out risk. So now that you know these 6 ETFs, how do you choose which ones to invest in? Here's a simple strategy. Consider your risk tolerance first. High-yield ETFs like SDIV can give you big monthly checks, but they can be volatile. More conservative options like PFF or DHS might not pay as much, but they're generally safer. Many investors create a mix of both, a portion for higher income potential and another portion for stability. Another tip is to think about your income goals. Are you looking for a few $100s a month to supplement your expenses, or are you aiming for thousands of dollars to eventually replace your full-time income? Your target monthly income will influence which ETFs make sense and how much you need to invest. Here's an idea. You could even start with just 1 or 2 ETFs and gradually add more as you get comfortable. The beauty of ETFs is that they're flexible, and you don't need to be a full-time investor to start seeing results. Even a small initial investment can grow over time thanks to the power of compounding dividends. I want to take a moment here to ask, which of these 6 ETFs appeals to you the most, and why? Are you more interested in the high-risk, high-reward options, or do you prefer safer, steady payers? Leave your reply in the comments section. Your answer might even help someone else make a better decision. Before we move on, if you're enjoying this content and finding it useful, make sure to like this video, subscribe to the channel, and share it with anyone who's looking to start generating passive income. Your support really helps us create more content like this. Now, let's talk about a few practical points for maximizing your monthly dividend income. First, consider reinvesting your dividends. Even though it's tempting to spend that money right away, reinvesting can significantly increase your long-term wealth. By reinvesting, you're buying more shares of your ETFs, which means more dividends in the future. Over time, this creates a compounding effect that can accelerate your journey toward financial freedom. Second, keep an eye on expense ratios. ETFs charge a small fee to manage your investments, and while it may seem minor, lower expense ratios mean more of your money actually works for you. Always compare similar ETFs and pick the ones with reasonable fees. Another key tip is diversification. Don't put all your money into a single ETF. Spread it across a few different ones to reduce risk. For example, combining a US-focused high-dividend ETF with an international one and maybe a preferred stock ETF can create a solid monthly income strategy. Also, consider the tax implications. Dividends are taxable in most countries, so it's important to understand how your income from ETFs will be taxed. Some investors use tax-advantaged accounts to help reduce their tax burden, which can make a significant difference over the long term. Now let's make this more relatable. Imagine if you invested just $10,000 spread across these ETFs with an average monthly yield of around 0.8%. That's $80 a month just sitting in your account, coming to you like clockwork. Over time, if you keep reinvesting and adding to your positions, that number grows. This isn't a get-rich-quick scheme. It's a slow, steady strategy that rewards patience and consistency. And here's a question I want you to think about. If you had the discipline to invest consistently every month, even with a small amount, How much could you realistically earn in a year from these ETFs? Drop your answer in the comments. It's fascinating to see different perspectives on passive income growth. Let's quickly recap the 6 ETFs we covered. Global X Super Dividend ETF, SDIV, Invesco, KBW High Dividend Yield Financial ETF, KBWD, iShares Preferred, and Income Securities ETF, PFF. Wisdom Tree U.S. High Dividend Fund, DHS. SPDR Portfolio S&P 500 High Dividend ETF, SPYD, and Global X Super Dividend US ETF, DAV. Each of them has its unique strengths, but they all share one thing in common: the potential to provide you with monthly income. Choosing the right combination depends on your personal financial goals, risk tolerance, and how involved you want to be in managing your investments. Some people like the thrill of high-yield, higher-risk ETFs, while others prefer safer, steadier options. The key is to find a balance that works for you. And one last thought: investing in dividend ETFs isn't just about the money. It's about freedom. It's about creating a system where your money works for you, allowing you to focus on the things you truly enjoy, whether that's spending more time with family, traveling, or pursuing hobbies. So, think beyond the numbers for a moment and consider the lifestyle this strategy could create. I'd love to hear from you. If you started investing in monthly dividend ETFs today, what would your first financial goal be? Would it be covering a bill, saving for a vacation, or building a long-term nest egg? Leave your answer in the comments. Your story might inspire someone else to take action. So, to wrap this up, monthly dividend ETFs are a powerful tool for building passive income. They're simple to understand, easy to manage, and can be incredibly rewarding if approached with the right strategy. Remember to diversify, consider risk levels, pay attention to fees, and reinvest your dividends to maximize growth. By choosing the right ETFs and committing to a consistent investment plan, you can create a steady stream of monthly income that supports your financial goals and gives you more freedom in life. If you found this video valuable, don't forget to like, subscribe, and share it with anyone who might benefit from building passive income. We've only scratched the surface here, and there's so much more to learn and explore about dividend investing. Your journey to passive income doesn't have to be complicated. Start small, stay consistent, and watch the magic happen over time. Remember, the most important step is to take action. Even a single investment today could grow into a meaningful monthly income in the future. So what's stopping you? Are you ready to start building your monthly dividend portfolio? Let me know in the comments, and let's start this journey together.